All right, let's jump in. It's 10:08 on the 26th of Feb, so Thursday morning, and start off with gold here because yeah, like I do every morning. But yeah, we had quite a choppy, very choppy kind of like couple of sessions here where you can see that we're really sort of continually taking out the highs, taking out the lows, taking out the highs again. Even just through that session overnight, we had a couple of sort of sharp little sell down, like pretty much sort of like let me sort of start that again. Asia shot up, went through pretty much a sort of consolidation phase, unable to sort of continue into there. And then sort of obviously that was through till 9 o'clock last night. So a little bit of a test up above sort of 5,200. But as you can see, sort of obviously swiftly sort of knocked back through there and then obviously unable to sort of follow through. So a little bit of a shakedown. But these shakes, if you get onto the lower time frame, you can see how quickly these things were just being bought straight up. And this sort of like price action where you're sort of seeing things like drops down and then just straight back up. Generally, it's kind of like if you're looking at sort of what's actually happening, sort of behind the scenes kind of thing with it, or under the hood, whatever you want to say. It's just sort of obviously sort of either stop hits, so yeah, stop runs, or just straight absorption. So obviously sort of like underneath the lows, bang, they buy it straight up. Lasted 2 seconds down here, bang, straight up. This one particularly because this one came very quickly, as you can see, dribble, 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 bang, and then the next. This is on a 5 minute chart now. Next 5 minutes, bang, straight back up, and then took out the highs, pull back, and then even right up into try above 5,200 again. So it's really just, you know what I mean? It's all over the place, but it's mainly because there's an argument for both sides. We've got the Iran thing that's happening, well, technically today, but today US, so Melbourne time, middle of the night kind of thing, early hours of the morning, where we're going to hear something possibly from that. The idea is basically, obviously, that they're going over there to sort of, I think the end goal is to get them to stop working towards any sort of nuclear arms or enrichments or whatever. Um, the idea that they're probably going to be able to get them to do that is probably pretty low. Obviously, it's not my sort of forte as to sort of how these things would break down or work, but you know what I mean. My feeling is they kind of hate America, and America coming in and telling them, "Hey, you can't have this." They're going to have to offer them something. I mean, what's the incentive for them? I mean, yes, okay, the incentive is you don't get bombed to smithereens, but yeah. Anyway, we'll see how we go with all that. And that's the reason that obviously gold has been catching a bit of a bid, or one of the reasons that gold's been catching a bit of a bid through the last week or so. Because remember, it was only Wednesday last week that we were down here at 4,800, and potentially after. I mean, look at this sell down here. I can't even remember what happened with this one here. This is a 30-minute candle dropping 5,000 down to 48.77, like 130 bucks in 30 in 30 minutes. So it was only a week ago that we were back down at 4,800. And of course, we've seen this incredible sort of rally, sort of pushing up through here. We had the tariff decisions as well. That seems to, for the most part, have just been okay, we're done and dusted with that. On that tariff thing, though, because it was delayed like 4 times, every time, or 3 times or something, I think the fourth time they actually came through. Every time they had that, gold appreciated. And they appreciated because gold sort of loves uncertainty. And, when they were supposed to have the decision, they didn't have it. Okay, bang, bit of uncertainty, what's going to happen? Gold appreciated. And then when eventually they had the decision, gold appreciated anyway. So, just being on the long side of gold through any of that period seems to have been sort of the winning play there. Anyway, look, that's all what's happening here. We're elevated, we're up above this big sort of 5,100, but as you can see, as much as sort of people are sort of saying, hey, there's high demand, there's lack of supply, all these sort of things. The Iran situation obviously there as well. You know, if all those things were the main drivers and everything, we would see continuation. I mean, if you look back at how, let's jump on to at least a minimum hour, how it was running when all that stuff was the strong narrative, lack of supply, high demand, all this kind of stuff. Look, this is how it's going. Bang! It doesn't sort of go up like, yes, we've had little pullback periods here, but it's more or less charging through and through. What we've seen here is obviously, more of a period of a larger sort of level of sort of consolidation. And all those factors are still being touted. So I think it's pretty much just waiting on the Iran sort of situation. I think sort of like if we find that they have some sort of resolution, some sort of deal where they go, okay, hey, look, you know what? We don't want to be bombed to pieces. We're going to meet you halfway or whichever, whatever. Something that basically prevents them from dropping bombs on them. I think gold is susceptible. I think it's going to be sort of confirmed underneath this 5100. We've got this sort of like obviously strong breakout point. It's come back and retested. Well, it's actually retested the wick first and then sort of, whoops, uh, got the springboard. It's got its second retest. And I said this the other day that this is how, breakouts happen. Breakouts will happen and generally sort of on two time frames. Of course, it depends what you sort of, what time frames you're trading with, but you'll generally get a lower time frame. In this instance, this is the 1 hour break retest this exact point here. And then you get the bigger retest, which is sort of on your sort of 4 hour or your daily kind of sort of stuff here. As you can see, there's your bigger retest. So with each one of these, depending again on your time frame that you're trading, you need to see the higher high for the continuation of that move. And obviously, the higher the time frame, the more significant the breakout is. For instance, with this 1 hour here, we had a break, we had a retest, we had a high high continuation. That's great, but you're not trading a 1 hour trade. Oh, sorry, 1 hour time frame to try and capture a daily, weekly move. You see what I mean? It's sort of like, this is great, and look, if you broke if you traded the breakout, you got the retest, or you traded the higher high, well, you've gone 77 up to 46, there's 80, $90 straight up through here. But obviously, it needs to do the retest on the higher time frames. And so, for instance, if you're trading like intraday and you're trading, excuse me, smaller time frames, you'll see breakouts with a quick little retest, but then you'll need to go to the 4 hour, and the 4 hour will give you the retest as well. So yeah, anyway, that's just a little sort of thing of how you sort of trade these breakouts as I sort of see it, or how I trade these breakouts anyway. So the point that I'm getting at is that yes, you did the 1 hour. Yes, it's kind of up above this 5100 here, but certainly if you get to the daily, it hasn't confirmed that we're actually going higher as of yet. As you can see, breakout, back test, went to go for the higher high. You would have wanted to see a big strong candle up through here yesterday to really say, hey, look, you know what? This is the level. We're breaking through it. Back test, high, high, because there's those three parts to the breakout. Breakout, back test, high, high. High, high is obviously sort of confirmation of the move. So all this aside, I think it's not as clear cut as sort of some people sort of make this thing out to be. I mean, particularly, look, gold people aren't quite as crazy as silver people. Silver people are sort of like, a little detached. And sort of like, we had those sort of mass sell-offs and then people upgraded their targets to 200 or something and then gave it a sort of like another 80% gain on the highs, not from where the level was. It was about, well, what it dropped down to $60 or something, didn't it? It dropped down to $70. I should actually know that. I just need a few more coffees. But so after this drop down here, this is around the period that people are calling 200. So it's not sort of saying, hey, you want to do 80% on top of this. If you're trying to do 200 off this, you're doing what, sort of 320% or something like this. It's a bit of an odd time to sort of upgrade your targets now. Anyway, whatever. That's silver people. I should we're using something a little bit cleaner. But gold people and that sort of obviously sort of have this idea that it's all these shortages and we're going up higher and all this kind of stuff. And look, it definitely could be the case. However, at the moment, you are seeing a lower high being put in through this period. So you can't really sort of say it's going one way or another. Like, as you sort of said, this is the chart that I've kind of been using intraday, and it is just chop city all over the place. It looks like one of those sort of memes of like, aha, look at the chart here. Like, like everybody knows John's color lines going everywhere. It's because it is just absolutely chopping up and down all over the place. Like, it's very hard to get a proper read on what's happening with this thing for further than, a couple of minutes, well, a couple of hours kind of thing. But, we had that little sort of consolidation, continuation. That's great. That led to our retest. Now we have a little bit of a channel forming. That's great. Now we've broken through the channel. Is this channel going to hold? Are we going to get a retest here and a continuation down? We have another sort of rising support coming through this level here. That sort of gave us a bit of a bounce area, justification for a bounce. You know what I mean? There's a whole heap of stuff going on, but if you strip it all back, we kind of see here's your sell down, 78%. So 78% retracement tells you there's a strong sort of indecision. There's not strong commitment to the move because sort of like, if we see a sort of move bounce and continue from say the 38%, then we know that there's a strong higher conviction in that direction, and we could see the continuation sort of come a little bit more. But the fact that we're bouncing and chopping and going up to 78% of this move sell down here means that sort of like there is some selling pressure because we've got a lower high, but buyers are still there enough to be able to drive it up here. Sellers are not so committed to be able to sort of really apply it and really continue pushing it down. So really, I know it's a whole bunch of back and forth, but that's just the case of it, the state of it at the moment. There's no clear direction as to sort of what we're doing next. What we can kind of do potentially is lay a couple of these over and sort of say, hey, look, this might give us a little bit of direction. Should we break these highs over here? So above sort of like say 52.17, which was the highs from overnight, or I would dare say sort of like, you've still got these kind of wicks down here, which could very much be bounce areas. For a commitment to the downside, you're really going to have to get back underneath 5100. Till then, there's very much the high likelihood that you come down here and then you bounce back up here, or is there a chance that we continue back up here and then sort of come back down here? Like, it's not a desirable sort of time, conditions and that to be sort of trading with this thing at the moment. But I think if you really want to sort of have a direction, that's your kind of top side level over here. And then, underneath there, that's really kind of like where we're going to get sort of direction. In between here, you can draw your little channels, you can do your Fibonacci's and all this kind of sort of stuff, but it's really just absolutely chopping over everything. So even if we do come down here, there's a little bit of a larger, I think it's on a daily, this one maybe. Sometimes they don't really perfectly line up, but as you can see, from the very lows down here, if we do say that, hey, look, that bounce that got us going last Wednesday, would that hold again? Should it come down over here? Most likely, yes. So again, it sort of prevents any sort of any sort of continued sell down here. So really, you're going to have to get a close up over here, or a close down here. That's really where you're going to give direction. Until then, it's really just short-term intraday intra-session trades. Just take a profit where you can, really, with it all. All right, moving on. We'll have a look at silver. So silver, look, we had a sort of little bit of a negative divergence actually sort of appearing in this period yesterday. So we had sort of obviously a continuation, this nice sort of break that we had through here. So this is, one of the better sort of trades that we had was sort of like, say, it was a line above here once upon a time, but obviously big blue candle through the zone. That's what we were looking for. And that sees the confirmation and the move up to the top side here. So that's the beauty of waiting for these things to close, because obviously, look, you've got these zones here. Doesn't quite get there, rejects down. Doesn't quite get there, rejects down. I mean, I'll show DXY in a moment. DXY is an absolute mess, man. But anyway, point is that that's the beauty of waiting for the candle to close with the confirmation. Where we're at the moment is a little bit of a sort of odd period, because we do have this zone through here. This is a daily zone, this one here. So if we jump on the daily quickly, you can see, body fills, tops of the wicks, this kind of thing through here. It tried to get through here. We did get that big candle that closed up through here. And if we get back onto the 4-hour, you can see this as well. We did get that sort of close up to the top side. We did sort of stuff around a little bit, and then metal sold off into the close last night, into the close of the US sessions. So that's still sort of showing not 100% full commitment to these kind of to these moves. If we put up here, we can see the sort of here's the body fill of these things, and nice little target hits it, and okay, we're coming back down there. Anyway, point being is that negative divergence into kind of a resistance area where we've got this sort of market has been selling it back. That's generally a pretty good combination. The negative divergences are great. Generally, they'll sort of do 2 or 3 kicks before you actually get them to sort of actually push back. I've noticed more recently, as you can see, yesterday I had it like this at this first little push up to the top side here. RSI is obviously sort of kicked up a little bit more as it sort of consolidated up the top over here, but resistance area with negative divergence, and it is starting to slowly grind into sort of action. So look, just from a sort of technical standpoint, you've got a negative divergence in that resistance area. You should expect this to probably come back and test these supports down here around sort of 86.30. At this stage, given everything that's going on, I wouldn't be necessarily looking for much more than that. If it does go to the downside, I think underneath this kind of where we at 88.20 should sort of open it up, and we should sort of be able to see at least body fill down to 87.12, if not down to sort of 86.47, 86.50, call it that kind of thing. Put a little draw thing on. This kind of zone down here on a break of 88.25. So you just want to see some sort of full sort of like follow through commitment of this sell down, because this sell came very late in the session as well. As you could see, it was really just, it was hugging the highs, and then sort of within, I think there's a half an hour or so, no, okay, over an hour period, dropped 91, was it 91, yeah, 91.20 down to sort of 88.30, so almost $3 it shed off there. But as you can see, excuse me, this has kind of obviously found support on the same sort of resistance level that we had, back Monday, Tuesday, or whenever it was. You want to sort of see if this is going to hold. So again, it's that 3 leg that we're always kind of looking for. We've gone down, we've found support, moving up, we're finding resistance. Are we here? I don't know. It's just early hours of the day. Previous support with these wicks down here. You want to see this 3rd leg attack these lows and then push through. And if you can do that, then you start the cycle again. And that's the sort of way that you sort of come down to these levels. But if we find that this thing is just sort of like this, like a bounce, and then just dribbles back up to the top side over here, it doesn't necessarily confirm top side, but it just shows a lack of selling pressure to get this thing to move down. So again, if you put it onto a lower time frame and you put the little fib over it, you can see at the moment we're up at the 38%. I mean, look, it's that early hour of the morning. We haven't really got the proper volume coming in yet. But should this thing sort of roll over from here and attack these lows, well, then we've got 38% retracement of this one move down here. So we can see, is this move going to continue down here? Now, again, this is on a 30-minute. So you're not looking for a full market turnaround on 30 minutes. But for an intraday trade, 100%. You're up at 38%, attack the lows. If we find that the buyers aren't sitting just here, then we've got every reason to sort of go, okay, maybe we can go down a little bit further. Let's do this. And we can say, okay, where else were the buyers? Well, the buyers were down here. So now we can drag this across over here. And that's a reasonable target for that next sort of move, should we break through here. So, that's just the sort of, the drilled down structure. But again, it's like anything. And it doesn't matter what time frame it's on. You've got to see that second wave, and you got to take out the lows. Then it starts again. 3rd wave becomes the 1st wave, and then we sort of look for a retest, and then we look to tackle those lows, and continuation on and on. That's how we'll sort of get that flow happening to the downside there. But the fact that this only happened very quickly into the end of the session, look, it's not really sort of something that I can fully sort of comment on. But, you've got sort of people that are trying to sort of shore up positions. You've got people that are sort of probably a little bit cautious about what Asia might do, because, of course, remember 2 sessions ago when China first came back, they dumped it down. Yesterday they ripped it up. So they did the polar opposite of what they did on Tuesday, yesterday. So there's a chance that, okay, they've ripped it up a bit. Now they'll sort of dump it down again. Maybe people are just sort of covering their positions for these things. You don't know. You don't know. But the fact that sort of was, for the most part of the session, happy to hold it pretty high, and then it came really quick at the end, could be more just sort of like people, okay, end of the session, let's clear up our positions, opposed to a full market going, hey, let's get rid of this. If that makes sense. It's kind of like more just sort of possibly a segment of the market kind of sort of trying to sort of lack of follow through. Okay, let's just clear these things up and then sort of see what happens when they come back online, whenever it is later tonight or next day for them. But anyway, in the short term, yeah, as I said, underneath sort of 88.30, then I would sort of kind of be looking down to sort of 86.60. All right, and moving on. So just before I finish that up, yeah, look, again, it's sort of like with everything going on with the Iran situation, I'm not expecting massive turnarounds. The fact that you got the negative divergence on the 4 hour into that daily resistance area, you would expect probably a little bit more of a reaction than just one candle sell off. But again, I'm just cautious a little bit about the timing and the fact that it held up here for so long and consolidated. So the market's obviously buying dips, buying dips. So there are segments of the market that are happy to buy this sort of thing. It's just within the last hour, they're like, okay, bang, let's dump it down. So from a sort of technical standpoint, I wouldn't be surprised to sort of see a test down here. As to sort of get further down there, well, you kind of need that sort of a close on a 4 hour underneath 86. I might actually just update the notes with that. All right, moving on. We've got the dollar. This is, oh my God. If you want a headache, this is what it is here. So, excuse me. Yesterday, well, just to unpack the whole thing, we were charging at it on this Tuesday night. Test, fail, broke through that trend. You can see the market's like, great, bang, dumped it down, managed to bounce up, retest that breakout area. So structurally, up until this point, everything's fine. Obviously, a lower high coming in here, and then sort of obviously close the session out, opened up, bang, sold down, sold down, sold down. Now, it started to form like a little bit of a wedge coming down here off the support area. Well, the previous sort of resistance area kind of thing, a little bit of a zone that we had coming down here. And then sort of it rallied like anything. Look at this move up through here. This is from 6 o'clock. So from Europe, they took it all the way back up and took it past the highs with a strong close. I've spoken about this a couple of times, that the difference between FX and sort of stocks, shares. We call them shares, not stocks. But the textbook sort of stuff for the shares is like, well, if you see a candle like this, bang, closes on the highs. In theory, that is like high demand, not being met with any selling. So you should expect at minimum a continuation there. But this closed literally on the high, no top wick, and banging, so it got sold into. And this is because it's in a high time zone, a high time frame resistance area. That's fine. But as you can see, they took it from the lows down here. Here's all your lows through this sort of period. Take a lower, rip it right up, take it right past all those highs from Tuesday night. Second effort, and this is what I talk about with these sort of when you use this sort of structure. One, first leg move, definitely need another coffee. First leg, find resistance, pull back, find support. Third leg, this is the leg that will tell us double top, higher high continuation, lower high, reversal. Higher probability of reversal. We got the lower high. Emphasis goes back on this bounce point, which is obviously down here, comes and tests it, and then breaks through, and change of trend. And as you can see, the continuation of the failure yet again to get through this zone, like the market is just sort of, it tries, bang, fell down. This one was actually around the time that we had the what's it called, the tariff decision last Friday. Definitely, one sec. Definitely need more coffee. Anyway, point being is that structurally you can see it turning around here, bang, and absolutely obliterated, and really just dribbled into that sort of into the close there. And this is another reason why I sort of question that sort of metals move a little bit. And the detachment between the dollar and metals a little bit here as well is because, we got that big sell off on gold down to, what was it, 40, I think, no, so 5100, 5090, while the dollar was on this big charge coming for the breakout here. Yesterday, we took out those highs. Gold, it was pulling back a little bit, but it wasn't really doing too much. And you know what I mean? Like, dollar was going all the way through. The metals market wasn't really believing it. And then even at the end of the session where we saw metals sell off, well, the dollar didn't really recover much there as well. So there's a little bit of a detachment from the metals at the moment. And certainly sort of like, every time it hits into this area and rejects, the market freaks out very quickly. So it's like breakout, breakout. No, okay, let's get the hell out of it. Boof, and we're seeing this. And it's like if you have a look at like, 'cause the euro's pretty much a sort of polar opposite of it all. This is actually finally attempting some sort of breakout north. This has been incredibly choppy yesterday. I mean, look at these sort of swings back down to, excuse me, decent run, back down to the lows, back past the highs. So all over the shop there. Get back on the DSY. So where to from here? Your guess is as good as mine. I guess we could say, hey, look, here's a bit of what should have held as a support, didn't hold, tested the underside. It probably favors at least a little bit more of a sort of continuation of this move. The fact that it didn't rally into the close makes me question that. And particularly if we do see metals sort of push back up, I wouldn't say that this detachment's going to last for long. And I wouldn't be surprised if we do see metals push up and this continue to push back down over here. I think there's going to be a point where it's just too many attempts to go through and it's just not doing it. It's just not being able to actually break through. And as I said, every time they fail to break through, you can see the market's very quick to give up on the dollar. It's funny because it comes out, it's so strong. But it just goes to show that how significant this level is, this 98 level. And should it break through, it's not just gonna go through for a couple of points. We've got low sort of lower time frame sort of technical levels that we can target and this kind of stuff. But most likely, the fact that it's been so difficult to get through here means that should it break through, there's going to be a lot of people that are short the dollar who are going to want to get out, which is going to in turn make it a very strong support should it break through. So the more times it tests it and fails, the stronger or the quicker we're seeing it push back each time. But should it break, the stronger and more significant that is going to be. But it's just a matter of whether that actually happens. And that's obviously sort of remains to be seen at the moment. But certainly at the moment, it's just one more whack on there, and you can see on the 4 hour that this thing sort of really kind of came back, gave it back very quickly. So we'll see how we go. But I wouldn't be surprised if we do see a little bit more sort of downside, at least early Asia. This little rising trend potentially might be an area for us here. 61% has been a big reoccurring retracement level for the dollar. So maybe if we do get a bit of a sort of rally through that area, maybe we've got a little bit of a horizontal down this area here. So that's probably an area that I'd be sort of looking to see if we do get a little bit of a reaction. Where we're just down through here, where we've got, it's only a 1 hour, but there was a little bit of support set up here, and we do have the 61% retracement of this last move, should this thing sort of come back down over here. Technically, you could do this one now. Still like the first one. Anyway, that's an area that I'll be watching. If we do see a rally from this point, maybe on with the show. But at the moment, as you can see, it's just very, very headache sort of stuff. Trying to get on the break side of the dollar. All right, tick along. We've got Aussie. Which are we using this one here? 55 charts that I like those. Um, there's this one here. Yeah. Okay, so this is what we've sort of been working with. This kind of range basically for the last week or so, really sort of confirming both sides of it all. We did get that big close out yesterday, so this was the candle here, and obviously as you can see, I was looking for a bit of a retest back into the 90s. I didn't actually end up sort of taking this because we did sort of overshoot a little bit further, right down into the 70s actually. So it's quite a big sort of pullback. And that was obviously around that time. If we look at the hours, so I mean, we had CPI yesterday. Expectation was a slight tick down. Not only did we not get the slight tick down, but we actually came in the same as last month, 3.8%. So inflation still way above target, not even moving in the right direction, which basically just bolsters the idea of, okay, well, rates at the sort of level they're at right now, uh, one sec. Yeah. Rates at the level they're at right now aren't really having any effect. So it kind of pushes the argument that, well, if it's not bringing inflation down, maybe we need to up the rates hike. And of course, RBA is pretty much the only, as I'm aware, the only sort of major central bank which are in this cycle at the moment. Hence why the dollar, so the Aussie dollar, has remained still very big, even through those rally efforts of DXY. I know Aussie's not part of DXY, but as I said, while the market's buying US dollar. So, the fact that it sort of is breaking out to the top side, not really much of a shock. I mean, I'll get to the Aussie yen in a moment as well, because that's up, I think we tipped 111.50 or something last night or thereabouts. So, look, the fact that it's up around these levels, it's not a big shocker, but you can see that sort of like, even though, okay, we had the strong CPI, which came in around here or something like this, strong CPI, hawkish outlook, all this kind of sort of stuff that supports the idea, okay, Aussie dollar moving up. Well, when the markets tried to buy DXY, which I showed a second ago, and the market was buying the US dollar for a potential breakout, look what they did with the Aussie. They dumped it right back down. And this goes to my point that I always sort of say that sort of Aussie data is good, but it really takes a back seat to what happens with the US dollar. If the market wants to buy the US dollar, nobody cares that you got a high CPI, that you got a hawkish outlook. They care in the fact that it'll stop you from, like if you were dovish against the buying of the US dollar, you'd be down here. So, okay, fine, we're not that. We've got a bit more of a hawkish outlook, so okay, so it retards the downside move, but it still is not enough to stop the move, if that makes sense. So, we were coming back down here. Had DXY broken out past 98, Aussie would have been trading back down towards 70 cents. I have no doubt about that. And it wouldn't matter that we got a stronger CPI. But the thing is, when you sort of take these things and you put them in conjunction with each other, we got strong CPI pushing up, US dollar pushing it down because of the strength, but hold on, wait, that US dollar strength disappears, or we're back up here again. So you've got two factors. You've got weak US dollar, plus you've got strong CPI. But had that sort of US dollar selling continued, you probably would have got that move down there. But as I said, if you'd been sort of if we'd had sort of a low print, or if say CPI or inflation wasn't an issue, then we'd be back way down over here, kind of thing. So it works in conjunction with what the broader sense of the market is doing with the US dollar, but it's still not enough to sort of really stop the movement, basically. So anyway, long story short, we saw the US dollar sell off. We do have a chance that, well, not a chance, it is looking a little bit more like US dollar may sell down a little bit further. So I wouldn't be surprised if we do see a move up around this 71.40. You might get a bit of a pullback first because it does look like it's just from its own chart, looks like it's rolling over a little bit here. Plus, we've got the Iran thing coming up. So, I mean, for the most part, Aussie seems to have ignored the whole Iran situation because, if Iran was the driver, the main driver for it all, and we're on the brink of yet another war breaking out, well, you would think equities Aussie they'd be a lot lower because they're risk assets. But that's obviously just not the case. Just looking at the chart, you can see it's very much at, like literal multi-year highs. So, I don't think that's really so much an issue. And again, this kind of all sort of ties in together because, you know what I mean? People are okay saying, and they're not one-to-one comparisons. But, if the whole market as a whole thought, World War III was about to kick off and everybody's there, and they're not fully just in a wait and see mode, gold should be, or in theory, should be trading a lot higher. Aussie should be trading a lot lower. But Aussie's not trading lower. Gold's not breaking out to new highs. They're elevated, yeah. Well, gold is elevated anyway, but it's not breaking out as of yet. So wait to see what the thing is. If they break down on discussions, then yeah, okay, gold will probably get another bid under it. But as it is right now, I think the market's still a little bit not fully convinced kind of thing in that. And as I said, going back to the Aussie, the fact that Aussie's up near its highs while you're having this sort of discussions of whether I mean the US has put whatever X amount of fighter jets and all this kind of sort of boats or whatever over there. So you know what I mean. Sort of like if the market was fully scared, Aussie should be trading a little bit lower, but it's obviously not. So look, anyway, back to Aussie. I would be surprised if we do get a test of up here. As to sort of breaking out from that, I would doubt it. Generally sort of first time back to these levels, you're not going to break it. So I wouldn't be surprised if we do get up around the 71.40. We do see a sell back here, but I wouldn't be surprised if we do start to sort of see something similar to this up around this zone. To sort of find a new area in which you can sort of consolidate around. It seems to be, find the box in which it's going to break at the moment. So, top side, I wouldn't be surprised, but I wouldn't be looking for necessarily any breaks higher at this point. And finally, just with the yen, and just tick it on here. So yes, we have Aussie yen and yen, man. Jeez, I've tried to sort of capture this thing on a breakdown a couple of times, to some success, but to others, absolutely not. Um, this thing is absolutely charging. It is ripping up through here. I had a look yesterday. I think these levels are going back to 1990 or thereabouts, so 35 years or so, 36 years now. So the yen just continues to sort of like torpedo itself. We had the Takayashi or whatever her name is the other day, the PM, um, basically come out through this period here saying, hey, look, you know what, I'm not really a big fan of more hikes. That's followed market sold back into it. Then sort of she had yesterday, she appointed two new people to, I guess, their central bank, their board or something like this, but two of them basically were doves. So, obviously, with those more doves, we've got more of a dovish outlook, and boom, market said, okay, well, the dovish, okay, moves away, and it just kept grinding up through here, not really giving much up. It says sort of peaked off here a little bit, but you can't say anything that this is more than just maybe a little bit of a sort of technical correction at this point here. So, yeah, we'll see how this thing continues. I don't really see any reason why it can't sort of come up to 112. Doesn't mean it's going to come in one go. We can certainly see maybe a continuation back down here and then sort of move up to the top side here. But I think really the fact that you're going through these highs over here, and you're into that sort of open air multi-year space, um, multi-year sort of space that, I don't see why, unless we see some sort of, intervention from the BOJ, that this thing is necessarily going to stop. It doesn't mean that it can't have sort of corrections coming down like this, certainly, but at the same time, I think sort of any sort of pullback down here, you take your bank on because from a structural point, it looks like, here's your high, here's your pullback, tackle the highs. I mean, it's the same thing as every instrument, every time frame. It's the same thing. Resistance, back to find support. This red zone here was that sort of 30, 40 year high, whatever. So find support, tackle the highs. Okay, it's broken through. You go through again. Retest, previous support, look for resistance. Previous resistance, look for support, look for the break for the high, up to the top. And realistically, we just have this channel. And this is only a breakaway channel. You know, and even if it does break this channel, it's still got its main trend support over here. Oh, metals are getting dumped here a bit. Interesting. 87.70 on silver there. It's coming down. Anyway, point being is that, yeah, I could definitely see some more upside for this, but I wouldn't be buying at this point because it looks very stretched. So I would look for that retest of 110.50 and then confirmation above 11.50, targeting 12.50. All right, that's it for me.